there are a lot of money that's going to be lost. When that happens, because it's going to happen, that is one of the things with bubbles. They burst.
Yeah.
They burst.
Yeah.
And when that happens, a lot of money will be lost, and a lot of people have to do restructuring of the debt and whatever, what have we. And when you do that, when you see that, that's where the dollar will come in as the one thing. And again, even though the dollar may be a very dirty shirt out there, it's actually the cleanest shirt. I definitely see that the market should be going much higher here, and I see that the crypto market can also explode here. I definitely see that. We haven't seen anything of the alt season just yet, for what I expect to see, and we need the dollar actually getting closer to its top if we see. But I still hope for a very, very strong October, and I think we will get that. So let's see. It's still a young October, so let's see if we don't get a big push here.
Bitcoin is gearing up for what could be its next explosive move, while smart money quietly positions ahead of the crowd. Henrik Zeberg, a respected macroeconomist and market strategist, is once again turning heads with his outlook on Bitcoin as it hovers near key resistance levels following a bounce off $108,000 support. Zeberg underscores that the strength of the US dollar remains a critical force shaping Bitcoin's trajectory. When experts refer to the dollar being down, they're typically pointing to its position on the US dollar index, which tracks the greenback against a basket of major currencies. A strong dollar, Zeberg explains, tightens global liquidity, raises debt servicing costs, and often weighs heavily on risk assets like Bitcoin. He warns that the bursting of the everything bubble could trigger widespread capital losses and a wave of debt restructurings, pushing investors to seek safety in the dollar, the cleanest dirty shirt. This scenario could pressure Bitcoin in the short term, much like the turbulence seen during the 2022 crypto crash, when firms like FTX collapsed under liquidity stress. Yet Zeberg remains cautiously optimistic. He believes the market still has room to rally, with a strong October potentially setting the stage for explosive upside. A weakening dollar could ignite a broader altcoin season, amplifying Bitcoin's next major move. Don't miss the next crypto surge. Subscribe now and turn on notifications to catch every major move live.
So you're saying what it will be? So the dollar down today? They'll say it's down. Yeah, you can say it's down. It could be on the Dixie. It can be against so many things. It can also probably be against I don't know, Bitcoin also, obviously. But I think the problem is that when they say it's down, it's probably on the Dixie that they measure it. So they say it's gone from the I don't know how high we were, 109 or something like that, and when you're down to 96 now. And I think that's the measurement that they take. It's a basket of different currencies, and then you'll measure it. So the euro is 57.6%, and you have the pound sterling and so on. You have the Japanese yen and so on. So it's a basket of different currencies. So when the Dixie moves up and down, it depends on the strength of the various currencies that are in this basket, and that's how it works. So it's actually the Dixie is not the dollar itself. It's actually the dollar versus different currencies. The situation is still that you have the dollar is so entangled in everything. So 67% of all debt in the world is still denominated in the dollar, which means that we are also to a certain degree short the dollar if you have some kind of debt in the world, which means that if the dollar starts to strengthen, which means it strengthens against the various currencies, well, then you will have a situation where the debt in the world will start to become more expensive to simply maintain. And that is the problem for the world. So when the dollar strengthens, that's when the rest of us gets a stranglehold on, and we start to feel that okay, we need to pay our debt, and it's going to be more and more expensive, especially emerging markets. So nobody really likes a strong dollar. The problem is if it gets too weak, then you'll have too much of inflationary pressures on. We have seen somewhat of inflation pressures over the last couple of years here, and I think we'll get to a period now where that completely will change. And you're going to see that the strength of the dollar is going to actually bring those inflationary power, forces, out of the game, so to speak, and then it's going to be something completely different. So, the strength of the dollar is everything here, and that's what I'm saying. If we get a deflation, if we have the largest bubble right now, I don't think there's any question about that. You can look to the stock market. You can say market capitalization in many various ways in terms of standard deviations above the long-term exponential mean and so on, in all sorts of ways. And every time you've had a bubble like that, and these have been smaller, you have seen the floor kind of open up, and you'll see that there are a lot of money that's going to be lost. When that happens, because it's going to happen. That is one of the things with bubbles. They
Sure.
burst.
Yeah.
They burst. And when that happens, a lot of money will be lost, and a lot of people have to do restructuring of the debt and whatever, what have we. And when you do that, when you see that, that's where the dollar will come in as the one thing. And again, even though the dollar may be a very dirty shirt out there, it's actually the cleanest shirt compared to even the euro. I mean, I live in the euro area. I can see the problems with the eurozone here. We have countries like, and I love Greece. It's not about Greece, but I love the Greek people. But their economy is not as strong as the German, for instance, or the Dutch or the Danish. And what you'll see is that there are productivity gains in per year in Denmark and elsewhere, which is higher than what we see in Greece. And if you have that on an ongoing basis, there is an inbuilt, which you can call structural friction of that currency system, which is what we see in the euro. And that's why the euro is not a clean sheet compared to a clean shirt compared to the to the dollar. And the dollar again is denominated in so many things. So if we get a crisis, where would you want us, hide out? What is it that you want to run to? And I still see that will be the dollar these days. There, we don't have an alternative to it. So the problem will be at that point, if it does like that, strengthens a lot, as I see. What happens then to risk assets that are really sensitive to a strong dollar? The book is really about what we talk about here. I call it the bust of the everything bubble caused by central bank hubris. So what I see is that you've had almost 2 decades of central banks acting like demigods, thinking that they can micromanage the business cycle, thinking that if they want they have 2.7 inflation rate, they want it down to 2.1, and they think they can actually micromanage that kind of to that degree, without actually being able to. And just to look at their their track record, I mean, that's the one thing we can go back and look at. They completely missed that inflation would spike to 9.1%. They completely missed that.
Bitcoin's next explosive move may already be in motion, while most investors are still on the sidelines watching it unfold. Bitcoin and the broader crypto market came under pressure as U.S. tariffs on Mexico and Canada went into effect, stoking fears of escalating trade tensions. Just days ahead of the highly anticipated White House Crypto Summit on March 7th, uncertainty around plans for a U.S. strategic crypto reserve added to the cautious sentiment. According to QCP Capital, the sell-off was exacerbated by Trump's renewed push for tariffs on Canada, Mexico, and China, a move that also weighed on equities, a development closely watched by Donald Trump himself. Amid these geopolitical pressures, Henrik Zeberg points to deeper macroeconomic currents shaping Bitcoin's path. He argues that years of aggressive monetary policy, money printing, and artificially low interest rates have inflated global debt and distorted financial markets. Despite these structural imbalances, Zeberg remains near-term bullish, expecting a blow-off top phase where Bitcoin could surge vertically, fueled by intense FOMO. However, he warns that if the US dollar index begins to rise sharply, it could act as a wrecking ball for risk assets like Bitcoin. With trade tensions rising and dollar strength looming, Bitcoin's next big move may hinge less on hype and more on macroeconomic reality. Let's get back to the interview.
They completely missed also, that it would be transitory. They talked about that for some time also until they figured out it was not. They missed the financial crisis. They were in February of 2008 and they missed the financial crisis and so on. We can just take the list and it just goes on and on how bad they have actually been in acting and reacting to any kind of slowdowns. So we now have trusted them with some of the most powerful tools in the world, and they have just ballooned the balance sheets because we kind of have an idea if we can just make, if we can get the trickle down effect going, we can get actually, money printing in, we can get shares and people to start spending, then they will actually, spend enough and we can get a positive cycle going. The problem is now that going from 2008, the U.S. had a debt of 60% to GDP, and now after everything that's happened here, you see now the U.S. debt is now up to 120% to GDP, and you see also private people and organizations, and not just in the U.S. because you're not alone about this. You can just look to Europe; it's the same thing. Everybody has debt. There is much more debt in the world. Guess what? if you actually go out and you lower interest rates, which is what the Fed has been doing by printing all this money and suppressing interest rate, what happens then? People think, oh, I can actually afford buying that house because now interest rate is 2% instead of 4%, which makes that I have much more, available. I'm richer. That we have seen, that we have harvested, that we have been pushing to the extremes here by lowering interest all the way down to zero negative rates in Europe at some point. When we do that, there is a distortion going on, and people are thinking that there are things that may not be a good thing to invest in that they will actually invest in because there's no reason to go out and buy bonds there. So the problem is now we have had this extreme long period where we've been keep doing it, and you said it also earlier. Just put some money on it, and we'll keep it going. People say, "But so bearish? Show me your shorts." I'm not short. I'm very very long, and you'll meet people that follow my positions also will know that. So I definitely see that the market should be going much higher here, and I see that the crypto market can also explode here. I definitely see that. We haven't seen anything of the alt season just yet. For what I expect to see, and we'd need the dollar actually getting closer to its top if we see, but that's for another day. So I'm with you. The vertical move to the ballistic kind of move that we see in the final end of it is what I call the blow off top. Then, yeah. And well, the problem is that there will be so much FOMO at the time when you start to see it, and nobody likes to believe something that just seems to go up. There's the second lot, the worst feeling in the market, the strongest emotion is that if you're starting to lose money in the market, that's a strong emotion you got there. But the second strongest is that if you jump out of something and you can see it continuing up, yeah, that is also painful. That's FOMO. And so the thing is, people will find it difficult because there is so much sentiment, so much FOMO when things starts to go in the vertical and ballistic. And I think it's about saying, okay, certain level, I've had enough. I will not look back. I just close down the charts, and then I focus on getting into the next thing. What I will be looking for in terms of when this should start to develop is to look to the dollar. And please do not fall into the sentiment where people say that the dollar is dying here. I mean, again, as I said, the sentiment, it's a dirty shirt out there, yes, but we're not having this whole de-dollarization, all that's going on. I don't see that. And I think when the dollar puts in the bottom, then start to be concerned about that, what that can bring. Because the dollar wrecking ball, if that starts to swing, which it could, and if we get to the 117 or just when we get to about 100, 105, 100, remember that is not going to be a good thing for equities or for risk assets. So I would be looking for, if you start to see the dollar rising, then probably it's because that that kind of dynamics could be coming. So that is one sign to look for, at least. I still hope for a very, very strong October. I think we will get that. So let's see. It's still a young October. So let's see if we don't get a big push here.
The shifting tide in the currency market is setting the stage for a pivotal moment for Bitcoin. As the dollar loses ground against major currencies, investors are recalibrating expectations for future rate cuts, and this recalibration could ignite a new wave of risk-on sentiment. A sustained pullback in the greenback may unleash fresh liquidity into risk assets, amplifying Bitcoin's upside potential and fueling a possible blow-off top. But the flip side remains just as critical. Any renewed surge in the US dollar index could tighten global financial conditions, slamming the brakes on momentum. With macroeconomic signals flashing and liquidity in flux, Bitcoin's trajectory may be defined less by speculation and more by the dollar's next decisive move. Could a weakening dollar be the spark that fuels Bitcoin's next explosive rally, or will a sudden dollar rebound cut the momentum short? Crypto moves fast. Share your take in the comments, spread the word with your network, and subscribe to catch the next wave before it hits.